In this video, guys, let's talk about leaving money on the table. Stay tuned. Hey traders, warm welcome to you. Thank you for joining me. All right, so I appreciate your likes, subscription, comments, shares, all that other good stuff. You know, the channel's growing well, and you guys seem to like kind of some of the things, the videos I talk about, which is great. Appreciate that. I like talking about trading. You guys like listening about trading. Hopefully one of the videos you get a bit nugget from and go, you know what, put on my trading and it makes you a better trader. That's what I hope when you get from watching these videos. So I do appreciate you. Thank you for all your support. Leaving money on the table. Tricky one. Initially when we're trading, starting to trade, we think, hey, you know, I want to catch every little move, I want to do this, I want to be every single opportunity, and you start beating yourself up when you're leaving money on the table. So what does it actually mean, leaving money on the table? So let's kind of look at a great example. Here we go. You're buying a double bottom, let's just say. So market comes here, first a low, second low, you go long, great. You think, I'm a genius, I've caught the low of the move, and my target is the high. We're a range bound environment. I don't really expect anything more from this. And you start to say, okay, I'll take my trade out here. Market goes up, you come out, you go, thanks very much. I've bagged myself 65 points, 65 pips, whatever you're trading, and you move on. Now, the rest of the day or the rest of the month, whatever time frame you're trading, this happens. And off it goes. And you go, I'm so frustrated. I left loads of money on the table. I could have an extra 300 pips from this, 300 points from this, what a type of thing you're trading. And you just get annoyed. And it's easy to get annoyed, but you shouldn't. Because the only time you should get annoyed, and annoyed is probably not the right word for it, but frustrated is when you don't stick to the plan and the idea you had. So, what do I mean? So if you had a scenario where you said, hey, okay, you know what? I'm going to take the trade and I'm going to look and trail under a moving average up and come out at highs, and eventually it comes out and stops you out. If you took it out of the first level of resistance, then you've got the right to be frustrated because you have broken the idea, the thesis of the trade, and that needs work on. The discipline, all that kind of stuff needs separate work, and that's a separate topic. However, if you said to yourself, hey, this is an A to B trade, here's A, here's B, I'm looking for this type of move, I want to get X, if we saw the letters of the alphabet here, I want to get X points out of it, that's it, my stop's here, finally quantified the risk, taking the trade, and that's what's happened. You have to say, fine, I stuck to my plan, and yes, maybe you left money on the table because this thing went on, but if your plan was to take a trade from here to here, and that's what you did, then that's the right thing to do. Now, can you improve? Of course, but it's not improving. This is not an execution improvement. This is not where you go, hey, I need to get better at executing and kind of doing this. No, that's a plan improvement. Two distinct different things. You go to your plan and you go, hey, what setups are conducive or allow me to look for a higher target or a trader or whatever it may be, and then you say, right, that's my plan now. Under certain conditions, I will look for a trailer or I will take out half or whatever, and then you implement it. So, you know, you kind of never really get to a point where you feel bad about leaving money on the table, because if you're sticking to your plan, that's the rule. Now, if the plan needs adjusting, the plan needs adjusting, and that's when you go out operationally, you close everything down, you're not in front of the screen, you look at your plan and you go, hey, do you know what, under these conditions, I need to just be a little bit more aggressive and start to look for bigger wins. And you should be doing that. It's something you should absolutely be doing in your trading, because if you're constantly taking little wins, it's an awful amount of time to kind of get the wheels going and get the move going and start making some money. You need those bigger wins that come out, give those good risk reward ratios, make you some money so that you can accelerate that equity curve. So don't feel bad about leaving money on the table if you do it and you are in conjunction with your plan. If you break your execution rules, if you like, so if you say you're going to do it, then that's a separate challenge, and you need to not do anything with the plan, leave the plan alone, because there's no point in meddling with the plan if you can't stick to the plan. Leave that, forget about that for now, focus on just sticking to your rules time and again. If it says come out highs, come out highs. If it says trail it, and just stick to it. That's your goal, not to make money. It's to stick. The goal is to stick to the plan. The plan will make you money. You can tweak and adjust it over time, but if you can't stick to it, you're going to be over the place. So don't worry about leaving money on the table. at that point in time, when it becomes something that's showing itself over a series of trades, a number of trades, you've got that pattern of leaving money on the table, then address it at an operational level and move on from there. All right, guys, hope that's been of some use to you. Keep the risk managed. I'll see you in the next video. Bye-bye.